Okay, so good evening to all mentorship traders. 26th of December 2019, Thursday, 8:30, and we are on our Thursday evening session. Recently joined mentorship community traders, a very warm welcome to you. As always, we will first talk about the Nifty, Bank Nifty, and what we expect from the index going forward this week. And then a later half will take up your doubts and questions. So I'm on tradingview.com. This is the daily chart. We generally do a top-down approach starting from the weekly chart of the index. So here we are with our channels. Nothing much this week so far. The index has been trading within the range of the previous week's high-low range. It's like an inside bar. Candlestick parlance, so far it looks almost like a bearish Harami pattern. But if you look at the momentum indicator down below, we did point this out in our last Thursday's session, where we said that see some amount of divergence shaping up. It's too early to act on it. So we do see prices going up and we do see momentum indicators coming down. This is similar to the hook trading strategy that we have within our mentorship program. So, but it's too early to take a step towards this contrarian setup. So from the intermediate medium-term charts, which is the weekly, markets range bound. The index is consolidating this breakout. We have kept this yellow channel, expecting some support if it dips further down. There is a momentum divergence shaping up. So cautiously bullish would be a good approach from this time frame. Another time frame lower, and we can see that the index has slipped now inside its erstwhile channel. This is not a good sign because this was a breakout, and slipping inside the channel may lead to a complete failure of the breakout. And if that happens, then it can lead to further weakness. On the daily time frame, we have this previous lows which acted as supports. We have it here. We have the channel in place. Now the index has slipped inside it. It will be interesting to see the next 5-6 days how it behaves. Momentum indicators, short-term momentum indicators are dipping oversold. But it's actually more clarity is something we will get from the lower time frame, which is over here, the 75-minute charts. Now, if you recall, we had kept purposely this channel, which acted as resistance and support, broke down, gave resistance, polarity, and then we had the sell-off. And now we have these two ranges. The market is currently trading at this range, so it's close to supports, and further down at this zone. This zone, which is 12,050, 12,080, so let's say 12,000 and 12,100, is a confluence with Fibonacci number. So is the current low. But considering the momentum indicators, I feel that the market can ease off a little further down. And I think 12,000, 12,100 acts as the immediate support for the index now as we speak. Structurally, the index is still well poised in an uptrend, cooling off. No sign of serious damage on any of the time frames. So one should not be extremely cautious, or I would say one should not be extremely bearish. Cautious is the right word, and we can look for swing long opportunities from good quality stocks. So let's be cautiously bullish on the Nifty going forward. What about Bank Nifty? The Bank Nifty will start a little different over here. We'll go to the 75-minute chart, and if you recall, we had this wedge kind of a formation. Now this extended further up the wedge that we drew last Thursday, and now we definitely have a breakdown. This zone is well taken care of, so no point having it here. This is the rising gap which was there on the charts, so we have kept it. And we can see from this movement on the lowest time frame, which we're looking at the 75-minute bars, is the index have come off quite a bit, and we might expect the test of previous lows or further down towards this rising gap. Needless to say, if you draw any kind of Fibonacci retracements, you will find confluence. So we see confluence at 31,800, which is close to this gap, this one. So both Nifty and Bank Nifty on the short-term time frame has given us a short-term breakdown and can lead to a little bit further damage. So that we will see going forward in the next few days. On the daily chart, we had this channel drawn. The lower border of the channel gave us very good resistances, and the index seems to be tired and is likely to come and test this gap which we have drawn in the 75-minute chart. So looks like we have a little more further weakness in both, especially in the Bank Nifty compared to the Nifty. Weekly, we did talk about this. Okay, so give me 1 second. What I'll do is I'll make this line visible only in the intraday charts, so that when we go to the higher time frames, we don't see them. So, sorry. Yeah. So here we are at the weekly chart. And if you recall last week, we did talk about the momentum divergence. Within the Bank Nifty, the index has fallen more than the Nifty. And so it's no more an inside bar as of now, but it's taken a kind of shape like a bearish engulfing. It's not engulfing because it's not started from above. But a fall below last week's low, which is this one, can lead for the weakness coming in. From a larger perspective, what is more important is this breakout. This is a multi-month, multi-year breakout that we had from the index a couple of weeks back to all-time highs. Momentum sentiment is all at an high, and these are are very strong, fertile grounds for traps. How do we know them? Well, we know them if it fails to hold and it slips within, and if it does that, then it can lead to further weakness. On the Bank Nifty, that chance is a little higher than the Nifty. We should continue to be cautious on the Bank Nifty also from a short-term perspective. Don't expect any huge volatility coming up tomorrow being a Friday and most of next week being holiday seasons. But nevertheless, I think the index should ideally not slip back inside this and close somewhere down here. If it does so, then this can turn out to be a breakout failure. And if it does so again as a breakout failure, that's not a good news. And to give you an exact number, I would say this low point, the 9th of December 2019 week starting, the low of that week, which is at the level of close to 30,996. So we're talking about 31,000. It's far off, but that is the crucial level for the Bank Nifty, below which this breakout is a complete failure. But there are definitely short-term levels. That's a different story. Before that, I think we'll have a couple of Thursday sessions. Short-term support comes in at close to 31,700 and 750, 760. Highly possible retest of these zones. So looking at Nifty, Bank Nifty, all we can say that there is a divergence between price and momentum on the weekly time frames, which is slowly playing off, not confirmed yet. Short-term charts have weakened, which can lead to a little bit of further extension on the downside. No big damage to the charts as of now, so can't go extremely bearish. Cautiously bullish is a good approach. And if we get some good swing long candidates to trade tomorrow or next week, don't sit on them for long. Because if this move is the tip of the bigger fall, then the long trades will not last longer. The long trades will give a small bounce back and they will reverse further down. We don't know that, but we would like to approach the week ahead cautiously bullish, looking for swing long trades, and it will be more like hit and run trades. I get some profits and I move out, not sitting on them for a long period of time. That's purely the trading approach. From an investment perspective, I would say wait for the market to cool off a little bit more at better, stronger supports. There you will find some more attractive prices to add on to your cash portfolio. Right? So let's end our market analysis by saying that going forward, we're going to maintain a cautiously bullish approach. So that's our Nifty Bank Nifty view, everyone. Please feel free to post your doubts and questions on the trades that we have done. We'll look into each and every one of them and try to learn from all the trades that we did.